Why are U.S. companies hoarding cash despite a strong economy? This is the question that's puzzling economists and investors alike. The current state of the U.S. economy seems to be thriving with a robust labor market, growth surpassing estimates, and easing inflation. Yet, amidst this seemingly positive economic climate, America's publicly traded companies are flashing a key sign of economic uncertainty. They've been hoarding cash. While American consumers are spending more now than they have in over a decade, U.S. corporations are taking a different path. They're increasing their cash on hand, even cutting back on share buybacks. It's a paradox that is leaving many scratching their heads. With Americans spending more than they have in a decade, why are corporations clinging to their money? This is the economic enigma we're exploring today. U.S. corporations have increased their cash on hand by 13% to $2.35 trillion from $2.08 trillion at the end of 2022. This revelation comes from the most recent cash pile report by Moody's Investor Service. In a thriving economy, companies usually invest their money back into the business or in securities, aiming to earn higher returns than the relatively low interest rates on deposits. So it's quite unusual for companies to hoard cash instead. Holding on to cash comes with a high opportunity cost. It's essentially expensive, depreciating cash. In a high-interest rate environment, companies with existing and expensive debt would typically want to use their cash to pay it down. So what's causing this change in behavior? The answer is as simple as it is complex. Why hold on to expensive, depreciating cash? The answer lies in the uncertainty of our times. The impetus for this behavior is the level of uncertainty that we are facing. This is a sentiment echoed by Vijay Govindarajan, a professor at Dartmouth's Tuck School of Business. He points to a myriad of global uncertainties that are shaping the landscape of business, from the lingering effects of the COVID pandemic to ongoing conflicts in regions such as Ukraine and the Middle East. The world is a stage, and right now, the play is unpredictable. This year alone, about 60 nations will hold elections, with even the core concept of democracy being thrown into question in certain areas. This lack of predictability, Govindarajan asserts, is the driving force behind companies' desire to keep their assets liquid. In a world that's more akin to a game of roulette than a chessboard, firms are opting for maximum flexibility. They are choosing to hold on to their cash despite the high opportunity cost. In such unpredictable times, cash becomes a strategic weapon. About 3% of publicly traded companies get delisted from exchanges each year due to various failures. These failures can be attributed to a multitude of factors, such as supply chain disruptions, labor strikes, changes in consumer demand, and technological disruptions, as detailed in a research report by Dartmouth's Govindarajan, Calgary's Srivastava, and Texas's Chatterjee. In the face of such uncertainties, hoarding cash acts as a form of self-insurance. By holding on to their cash reserves, companies are not only protecting themselves from potential financial pitfalls, but also ensuring they have the flexibility to navigate unforeseen circumstances. Cash in this context becomes a safety net, a buffer against the unpredictable nature of the market and global affairs. So, while a robust economy typically prompts companies to invest and expand, the current global climate's unpredictability has led to a shift in strategy. In conclusion, while a strong economy usually encourages investment, the uncertainties of our current global climate have led companies to prioritize cash as a form of self-insurance, a strategic weapon in uncertain times. As we've seen, companies are increasingly choosing to hoard cash as a form of self-insurance against the unpredictability of the current global climate. But what does this mean for the broader economy? When businesses sit on large piles of cash, it can slow economic growth. This is because money that is hoarded is money that isn't being invested into research and development, infrastructure, or job creation. All vital components of a thriving economy. On the flip side, cash hoarding can also act as a stabilizer during economic downturns, providing businesses with the necessary liquidity to weather financial storms. This paradoxical situation underscores the delicate balance that businesses and economies must strike. As we navigate these uncertain times, it will be interesting to observe how this trend evolves and what it means for our global economy moving forward.